February 3rd. Payments explained. What's really behind the $2,100 headlines? Over the past few days, many Social Security recipients have seen the same headline repeated again and again. February 3rd payments confirmed. $2,100 or more hitting accounts? Check your bank now. For seniors who rely on Social Security, that kind of message grabs attention immediately, and understandably so. When every dollar matters, a number like $2,100 raises hope and sometimes confusion. So let's slow this down and focus on what February 3rd actually represents. The February 3rd payment is not a new bonus, and it is not a special check sent to everyone. It is part of the regular Social Security payment schedule, and it applies only to a specific group of beneficiaries. The Social Security Administration operates on a structured calendar. Most people are paid on Wednesdays based on their birth date, but there is a separate group, longtime beneficiaries, who are paid on the 3rd of every month, regardless of birth date. That is who February 3rd is for. As for the $2,100 figure, it is not a guaranteed amount. It reflects what some people receive based on their individual work history, benefit type, and claiming decisions. Many people receive less, some receive more, and many will see a completely different number. In this series, we are going to break down who actually gets paid on February 3rd, why some payments reach $2,100 or higher, and what determines your amount specifically. Because when it comes to Social Security, understanding the rules matters far more than headlines. How the Social Security payment schedule really works. To understand who gets paid on February 3rd, you first need to understand how the Social Security payment schedule actually works. Because it is not random. The Social Security Administration follows a structured calendar that has been in place for decades. Payments are organized by benefit type and when you first started receiving benefits. For most retirement and disability beneficiaries today, payments are issued on a Wednesday each month based on date of birth. This is the system most people are familiar with. But there is a second system that still exists. A separate payment group receives Social Security on the 3rd of every month, regardless of birth date. This group was established before the current Wednesday-based schedule was introduced. So who is in this group? If you started receiving Social Security before May of 1997, you are paid on the 3rd. If you receive both Social Security and SSI, you are paid on the 3rd. If you live outside the United States, you are also paid on the 3rd. These are long-standing rules, not new changes. That's why February 3rd is meaningful for some people and completely irrelevant for others. It has nothing to do with income level, benefit increases, or special approvals. It's simply about which payment group you belong to. This distinction matters because many headlines imply February 3rd applies to everyone. It does not. If you are not in this group, your payment will arrive later in the month, exactly as scheduled. And if you are in this group, February 3rd is your normal deposit day. Once you understand where you fit in the schedule, everything else becomes much clearer, including the conversation around payment amounts. Who actually gets paid on February 3rd? And who does not now that we've explained how the payment schedule works? Let's be very specific. Who actually gets paid on February 3rd and who does not? Because this is where a lot of misunderstandings begin. February 3rd payments are limited to a clearly defined group of beneficiaries. These are not new recipients, and this is not based on income level or benefit amount. The first group includes people who started receiving Social Security before May of 1997. These are longtime beneficiaries who were enrolled before the SSA introduced the Wednesday by birth date system. If that's you, the 3rd of every month has always been your payment date. The second group includes individuals who receive both Social Security and SSI. To avoid overlapping payment schedules, the SSA places these recipients into the 3rd of the month group automatically. The third group includes beneficiaries who live outside the United States. Their payments are also issued on the 3rd, regardless of birth date. If you fall into any of these categories, February 3rd is your normal payment date, not a special one-time event. On the other hand, if you began receiving benefits after May 1997 and you do not receive SSI alongside Social Security, then February 3rd does not apply to you. Your payment will arrive on the Wednesday assigned to your birth date later in the month. This distinction is critical. Seeing news about February 3rd does not mean your payment is early, delayed, or missing. It simply means the headline applies to a different payment group. Once you know which group you're in, you can stop guessing and start focusing on what actually affects your payment amount. where the $2,100 number comes from, and why it's not universal. Now let's address the number that's getting the most attention, $2,100. This figure has been circulating widely, often presented as if it were a standard payment tied to February 3rd. But that framing leaves out the most important detail. $2,100 is not a flat payment, and it is not guaranteed to everyone paid on that date. So where does it actually come from? Social Security benefits are calculated based on individual earnings history, not headlines. For retirement benefits, the SSA looks at your highest 35 years of earnings, adjusts them for inflation, and applies a formula to determine your monthly benefit. People who earned consistently at moderate to high levels throughout their careers, and especially those who delayed claiming benefits, are far more likely to see payments in the $2,100 range or higher. The same principle applies to SSDI. Disability benefits are also based on earnings before disability began. Individuals with stronger earnings histories can receive significantly higher SSDI payments than the average recipient. This is why two people paid on the same day can receive vastly different amounts. One may see $400, another may see $800, another may see $2,100 or more. None of those amounts are random. They reflect decades of work history, timing decisions, and benefit type, not a new policy or special increase. It's also important to understand that averages matter. The average Social Security retirement benefit is well below $2,100. That means anyone receiving that amount is already above average due to their individual record. So when you hear $2,100 tied to February 3rd, remember this. It's a reflection of who qualifies, not a promise of what everyone gets. Retirement benefits. How some payments reach $2,100 or more. To understand how some February 3rd payments reach $2,100 or more, we need to look closely at Social Security retirement benefits. This is where long-term work history makes a major difference. When you retire, the Social Security Administration calculates your benefit using your highest 35 years of earnings, adjusted for inflation. Those numbers are then run through a formula to determine your primary insurance amount, or PIA. If you earned steadily, and especially if you earned at or near the taxable maximum for many years, your benefit will naturally be higher than average, but earnings alone are only part of the story. Timing matters just as much. If you claimed benefits at your full retirement age, you receive 100% of your calculated benefit. But if you delayed claiming beyond that point, your benefit increases by about 8% for each year you wait up until age 70. That delay adds up. Someone who worked consistently and waited until age 70 to claim could easily push their monthly benefit into the $2,100 range or higher, even without hitting the absolute maximum. For context, the average retirement benefit is significantly lower than $2,100. That means anyone receiving that amount is already above average due to a combination of earnings history and claiming strategy. This is why the $2,100 figure shows up in discussions, but only for a subset of retirees. It is not new money. It is not a special February payment. It is the result of decisions made years earlier, now reflected in a regular monthly deposit. Understanding that helps separate reality from hype and puts the focus back where it belongs, on how benefits are actually calculated. SSDI payments, why some disability benefits also exceed $2,100. When people hear about Social Security payments over $2,100, many assume that applies only to retirees. That assumption is not entirely accurate. Some SSDI recipients, Social Security Disability Insurance, also receive monthly payments in that range or even higher. Here's why. Unlike SSI, which is strictly needs-based, SSDI is earned. It is calculated using your work history and earnings record before you became disabled. The Social Security Administration applies a formula similar to retirement benefits, looking at how much you earned and paid into the system over time. If you had a strong earnings history before your disability began, your SSDI benefit can be significantly higher than the average. For context, the average SSDI payment is well below $2,100, but averages do not tell the full story. Individuals who earned consistently at moderate to high levels, especially in skilled or long-term professions, can qualify for SSDI benefits that exceed $2,000 per month. In fact, the maximum SSDI benefit is closely tied to the maximum retirement benefit at full retirement age. That means the ceiling is much higher than many people realize. This is an important distinction. Receiving SSDI at $2,100 or more does not mean someone is receiving extra assistance or a special payment. It reflects income they earned and contributed before disability changed their ability to work. It also explains why SSDI payments vary so widely from person to person. One recipient may receive $2,300, another $2,600, another $2,100 or more. All are correct because all are based on individual records, and this is why February 3rd headlines can be misleading without context. The payment date is routine. The amount is personal. The 2025 COLA, how a 2.5% adjustment pushes some payments higher. Another key reason the $2,100 number is showing up more often this year is the 2025 cost of living adjustment, commonly known as COLA. For 2025, Social Security benefits received a 2.5% COLA increase. That adjustment went into effect starting with January payments and is now fully reflected in February deposits, including those paid on February 3rd. On its own, 2.5% may not sound dramatic, but when applied to already higher benefit amounts, the impact becomes much more noticeable. For example, someone receiving $2,000 per month before COLA would see their benefit rise to approximately $2,050. For someone closer to $2,050, that same percentage can easily push the payment past the $2,100 mark. This is why some recipients cross that threshold this year, even though nothing about their work history or claiming strategy changed. COLA works proportionally. People with lower benefits see smaller dollar increases. People with higher benefits see larger dollar increases. That doesn't mean one group is being favored over another. It simply reflects how percentage-based adjustments work. It's also important to clarify what COLA is and what it is not. COLA is not a bonus. It is not a special February payment, and it is not tied to a specific deposit date. It is an inflation adjustment designed to help benefits maintain purchasing power over time. Once applied, it becomes part of your regular monthly benefit going forward until the next COLA is calculated. So when you see higher numbers this year, including $2,100 or more, COLA is often part of the explanation, especially for longtime beneficiaries with strong earnings records. Survivor and spousal benefits, why some payments are higher than expected. Another reason some February 3rd payments reach $2,100 or more has nothing to do with retirement timing or disability alone. It has to do with survivor and spousal benefits. These benefits are often misunderstood, and as a result, the payment amounts can come as a surprise, especially when they are higher than expected. Let's start with survivor benefits. When a spouse passes away, the surviving spouse may be eligible to receive up to 100% of the deceased spouse's Social Security benefit, depending on age and circumstances. That means the payment is based not on the survivor's work history, but on the earnings record of the person who passed away. If that individual had strong lifetime earnings or delayed claiming benefits, the survivor benefit can easily exceed $2,000 per month. This is one of the most common explanations behind higher February 3rd deposits. Spousal benefits work differently, but they can still affect total income. A spouse may receive a benefit based on their partner's earnings record, especially if their own work history resulted in a lower benefit. In some cases, households receive multiple benefits tied to different records, which can increase total monthly deposits. Here's the key point. Higher payments tied to survivor or spousal benefits are not new increases and not special February payments. They reflect long-standing entitlement rules within the Social Security system. Because these benefits are tied to another person's earnings history, the amounts can be significantly higher than average and often higher than expected. This is why looking only at headlines misses the bigger picture. Behind every $2,100 payment is a specific benefit type, a specific record, and a specific explanation. Medicare premiums, why your deposit is lower than the headline number. At this point, some people notice something confusing. They hear about $2,100 Social Security payments, but when they check their bank account, the deposit is lower than expected. This is where Medicare premiums come into the picture. For most Social Security recipients, Medicare Part B premiums are automatically deducted from monthly benefits before the money ever reaches your account. That deduction happens behind the scenes, which is why many people focus on the net amount instead of the gross benefit. In 2025, the standard Medicare Part B premium is $185 per month. So If your gross Social Security benefit is $2,100, your actual deposit after the Part B deduction would be closer to 1,215 before any other withholdings. And for some people, the deduction can be even higher. Higher income beneficiaries may pay additional Medicare charges known as IRMAA, or income-related monthly adjustment amounts. These are based on prior tax returns and can significantly reduce the net deposit. This leads to an important clarification. When headlines talk about $2,100 payments, they are usually referring to the gross benefit amount, not what lands in your bank account. That difference matters. A lower deposit does not mean your benefit was reduced. It does not mean something was taken away unexpectedly. It means deductions were applied as designed. This is why comparing deposits with friends or family can be misleading. Two people with the same gross benefit can receive very different net amounts depending on Medicare premiums and income-related adjustments. Understanding this helps explain why the number in your account may not match the number in the headline and why both can still be correct at the same time. Taxes and withholding. Another reason. Your net payment looks smaller. Even after accounting for Medicare premiums, some recipients still notice that their deposit is lower than expected. The next major reason is tax withholding. Many people don't realize that Social Security benefits can be taxable depending on your total income. This includes not just your benefit, but also wages, pensions, withdrawals from retirement accounts, and other sources of income. To manage this, the Social Security Administration allows beneficiaries to voluntarily withhold federal taxes from their monthly payments. If you've elected withholding, that amount is deducted automatically before the deposit reaches your account. The available withholding rates are 7%, 10%, 12%, or 22% of your monthly benefit. Here's how that plays out. If your gross benefit is $2,100 and you've chosen to withhold 10% for federal taxes, that's $210 deducted right away. Combine that with a Medicare Part B premium, and the net deposit can look significantly lower than the headline number. This often surprises people, especially those who focus only on the gross benefit amount. But it's important to understand this clearly. Tax withholding does not mean your benefit was reduced. It does not mean SSA recalculated your entitlement downward. It simply means you chose or were advised to prepay taxes throughout the year instead of owing a large bill later. State taxes can also play a role. While most states do not tax Social Security, a handful still do, and those rules vary. The key takeaway is this: your gross benefit and your net deposit are not the same thing. Headlines usually reference the gross number. Your bank account reflects deductions. Understanding that difference prevents confusion and helps you plan more accurately month to month. What to do? If your February 3rd payment is late or missing. As February 3rd arrives, many beneficiaries check their bank accounts early in the day. For most people in the February 3rd payment group, the deposit appears as expected, but for some, it may not show up right away, and that can be unsettling. The first thing to remember is this: a late deposit is not the same as a missed payment. In many cases, delays are caused by bank processing times, not the Social Security Administration. Some banks release funds early in the morning, while others process deposits later in the day or even the next business day. Weekends and holidays can also affect timing, especially if the payment date falls close to them. Here's what the SSA recommends before taking action. First, allow the full business day on February 3rd to pass. Many deposits arrive by the end of the banking day, not first thing in the morning. Second, check your My Social Security account. This will show whether the payment was issued and the amount sent. If the payment is listed there, it means SSA has already done its part. Third, confirm your direct deposit information. If you recently changed banks, closed an account, or updated details, the payment may be delayed or rerouted. Only if your payment does not arrive within 3 business days of February 3rd should you contact SSA directly. Most delays resolve without any action required. And importantly, a delay does not mean your benefit was reduced, stopped, or denied. In nearly all cases, it's simply timing, and patience is the best first response. Working while receiving Social Security. Earnings limits. Explained. Another important issue tied to February 3rd payments and Social Security amounts in general is working while receiving benefits. This is especially relevant for people who are not yet at full retirement age. If you are receiving Social Security retirement benefits before full retirement age, and you continue working, your earnings can affect your monthly payment, but only temporarily. For 2025, the earnings limit for individuals under full retirement age for the entire year is $23,400. If you earn more than that amount, the SSA withholds $1 in benefits for every $2 you earn above the limit. This is where confusion often starts. When benefits are withheld due to earnings, they are not lost forever. Once you reach full retirement age, the SSA recalculates your benefit and credits you for the months when payments were withheld. In other words, the system adjusts your benefit upward later to reflect what was temporarily held back. For people who reach full retirement age during the year, a higher earnings limit applies, and the reduction formula is less strict. It's also important to note that these earnings rules do not apply once you reach full retirement age. At that point, you can earn any amount without affecting your Social Security benefit. For SSDI recipients, different rules apply, including trial work periods and substantial gainful activity thresholds. The key takeaway is this: working does not automatically disqualify you from Social Security, but understanding the earnings limits is critical, especially if you're seeing changes in your monthly payment. Knowing the rules ahead of time helps you avoid surprises and plan your income with confidence. State taxes, budgeting, and why $2,100 is still above average. When people hear about Social Security payments of $2,100 or more, it's important to put that number into proper context. First, let's talk about state taxes. While Social Security benefits are not taxed by the federal government for many recipients, some states do tax Social Security. The rules vary widely depending on where you live. Most states exempt Social Security entirely, but a handful apply partial or conditional taxes based on income level. That means two people with the same gross benefit can end up with different net income simply because they live in different states. This is one reason why budgeting based only on headline numbers can be misleading. Now let's address the bigger picture. A monthly Social Security payment of $2,100 is well above the national average. The average retirement benefit is significantly lower. That means recipients at this level generally had a long and consistent work history, moderate to high lifetime earnings, or benefits tied to survivor or disability records with strong earnings. That higher benefit provides more financial flexibility, but it does not remove the need for careful planning. Even at $2,100, many retirees still rely on Social Security as their primary source of income. Housing, utilities, food, healthcare, and insurance costs continue to rise, and fixed income requires discipline. This is why understanding your true net amount after Medicare, taxes, and other deductions is essential. The headline number tells part of the story. Your actual monthly budget tells the rest. Knowing exactly what comes in, what goes out, and when it arrives allows you to make informed decisions, rather than reacting to headlines or assumptions. And that clarity becomes especially important as we look ahead to planning, protection, and long-term stability. Protecting your benefits. Scams, misinformation, and what SSA will never do. Whenever headlines about Social Security payments start spreading, especially numbers like $2,100, there is another trend that always follows. Scams, fraudsters target confusion. And payment dates like February 3rd give them exactly that opportunity. It's important to clearly understand what the Social Security Administration will never do. SSA will never call you unexpectedly to threaten suspension of your benefits. They will never demand immediate action to secure a payment. They will never ask for gift cards, wire transfers, or payment fees, and they will never ask for your Social Security number or bank details by text or social media. Any message that creates fear, urgency, or pressure is a red flag. Another common tactic involves misinformation. Some scammers claim they can help you unlock a higher benefit, qualify you for the $2,100 amount, or move your payment date earlier for a fee. That is not how Social Security works. Your benefit amount is determined by your official earnings record and entitlement rules, not by outside services. No one can raise your benefit or change your payment date unless the SSA itself updates your record. The safest way to protect yourself is simple. Rely only on official sources. Your My Social Security account, official SSA letters, direct contact you initiate using published SSA phone numbers. If something sounds urgent or threatening, pause before responding. Scammers rely on quick reactions. Understanding the rules and staying calm protects not only your money, but your peace of mind. Final takeaways: what February 3rd and $2,100 really mean. As we wrap up this entire breakdown, it's important to step back and look at the bigger picture. The February 3rd Social Security payment is not a special event, and it is not a new program. It is part of a long-standing payment schedule that applies to a specific group of beneficiaries, primarily those who began receiving benefits before May 1997, those who receive both Social Security and SSI, and those living outside the United States. The $2,100 number is real, but it is not universal. It reflects individual benefit calculations based on lifetime earnings. When benefits were claimed, whether benefits are retirement, SSDI, or survivor-based and recent cost of living adjustments, some people receive less, some people receive more, and all of it follows rules that have been in place for years. What matters most is understanding where you fit. Knowing your payment group, your gross benefit, your deductions, and your net deposit allows you to plan confidently instead of reacting to headlines. It helps you budget accurately, avoid unnecessary stress, and protect yourself from misinformation and scams. Social Security remains one of the most reliable income sources in retirement and disability. Payments arrive on schedule, adjustments are formula-based, and changes are documented, never secret. The real takeaway is this: when you understand how the system works, the noise fades. Instead of wondering why someone else received $2,100, you can focus on what your benefit is designed to provide: stability, predictability, and peace of mind. And that clarity is far more valuable than any headline.